Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So traders, I want to give you a quick little update on the interest rates and why I believe they're about to pull back across all these markets through here. So I want to give you a bit of an update on what I'm seeing through there. So traders, make sure you grab that. Again, I've got a trading course that's going to really help you. It goes through 5 phases. Phase number 1 is the biggest mistakes you're making right now and how to overcome them. So if you're losing a lot of money, that's definitely for you. Phase number 2 is all about the chart reading techniques, what to use to actually read the markets. Phase number 3 is some awesome free indicators you can use today to actually start to use overbought, oversold, and also really good times to buy. And it's not RSI or stochastics or any of that sort of stuff. It's a very simple indicator. Phase number 4 is all about why you actually don't need, why you're only really 10 trades away from financial freedom, 10 really good trades away for financial freedom. And why you're only 7 trades away from making a literally, becoming part of the 5% club of income earners in the stock market. So you're only literally 7 trades away from that. And then you are 10 trades away from that. And then the last phase is all about my trading system and how I scan the markets and so on and so forth. Again, all free, guys. Link in the description. So let's have a look at the 10-year, we'll look at the 30-year, and we'll look at the 2-year. So looking at these markets here, the big thing I'm noticing right now, if I go back, let's go back to the weekly chart here for a minute. The big thing on the 10-year is look where we are at. Oh, we don't. I thought I was waiting for something magical to happen, but it just didn't happen. It's like, did you see that? What happened? Oh crap, didn't work. That's like Elon Musk trying to show his truck and he throws the rock at the truck and it smashes the window. That wasn't supposed to happen. Anyway, so we've had a very, very, very big move, okay? And things need to, if things become out of whack, they become balanced. Out of whack, they become balanced. And what I mean by that is this, is that whenever we have very strong moves, ups and downs, that's right, ups and downs, that's the proper pronunciation for them all right, the ups and downs. Whenever we get strong moves, ups and downs, man, I'm getting hooked on that ups and downs thing. Oh, I love trading. Anyway, so we have this, look at this here, ups and downs. Oh, all right. I better get. I'm cracking myself up in this video. Ups and downs. Oh, jeez. So look at this here. So we've had a very big move up, and whatever. And as you know, if you look at any market, whenever something goes vertical like this, there's a high probability we're likely to do either 2 things. 1, just do this for a bit, or 2, what's more likely to happen? Actually, no, not more likely to happen. That's 1 scenario, or 2 scenario is we actually get a bit of a pullback. And we generally retrace, I've seen probably 80%, sometimes even 100% of the vertical move in the markets, right? So you can see here, vertical move down, it actually went, sideways, and it actually retraced a whole lot. So, but John, you don't understand, this time is different. That's right. This time is different. So we're looking at the stock market. We're looking at that big resistance point there, right? We're looking at this here. So we see this big resistance point here. So that's that big resistance. Now look what's happening through here. The trend is starting to slow down. Look at this here. So we had a very nice move up. And look what happened here. Then we came down, we came up, we came down, and now look what's happening now. We're actually just we're sort of getting a bit of a head-shoulder formation, if that's what you want to call it. But the big key here is this. Look at this here. If I just draw, let me actually, this resistance line here, see this point through here? This is where you get like right into short-term TA stuff. I learned this from one of my earliest short-term, it's just amazing. Anyway, so look at this here. So look what happened here. So we hit the resistance here. Let me actually do a bit of a chart reading TA education for you here, right? Let me take that for screen. So look what happens here, right? So we have what? we have this, see all this sort of, that sort of area of resistance, right? We had a few wicks up here and then all the same through. This is the daily chart, remember? This is all days. Then we broke back up, well, hit that level of resistance, smack on it. Now we've come back down. Look what's happening right now as we speak. And this is where traders, if you want to be a good trader in the market, listen to the markets. That's why go get my free trading course, because in the biggest mistakes you're making and also learning how to read the charts, the better you can read the chart, the better trader you'll be. Even if you don't buy anything from it, just go get that free trading course. I promise you, it'll help you at least, right? But look what's happened here. Resistance, resistance. Once we broke up, we came back down. And then look what's happening now. Yesterday and today, what? Complete and utter rejection. We had a whole bunch of resistance through here. See how it actually had problems through there, then it broke up, and then we broke back down. And now that exact same area, it's not, I wouldn't say it's, can I make that much thicker? That's what she said. All right, John. So yeah, it's more like an area, right? So we can see, I don't know. I don't know. I'm just cracking myself up with these jokes. I say a joke and then 2 minutes later, I'm like, oh, that was funny. Oh, geez. All right. So we can see, look at this here. So we have this rejection point. Look what's happening here. So there's a real high probability now we got this rejection point. We had this rejection point here, and then now here, which also could be what? Which also could be, once again, could be, if you're looking at shoulder, head, and then shoulder formation, you got the neckline. So there's a real good probability, I would say, that we're going to start to fall out through here, and then we're going to start to move down on the interest rates level. And the next major support level is that next support level is actually this point down the bottom here. So let me do a bit of a copy and paste. Oh, what happened there? How do I control C? Oh, there we go. Yeah. All right, cool. Right. So we have this head and shoulder formation, but then that next major, that support level is actually down through there. As you can see, this sort of support level through here. The actual projection for the head and shoulder formation, let me actually just do that from there to there. And if we break to the downside, then guess what? Oh, look, we're almost there. So that's actually the projection for the head and shoulder. This is actually short-term, again, technical analysis. And so you can see here that that's where we are right now. We've rejected it there. So we should start to see a bit of a break to the downside. And once we actually get a break to the downside, we actually start to break out of this level through here, that level through there. If we can get a breakdown, so let's go to the 4-hour chart. This is look at this 4-hour chart. Oh, that line's a bit higher, as you can see. See this back here? Look at this back here. Isn't that amazing? Look at this 4-hour chart. It's just, oh my goodness. I love this stuff, guys. I love it. Look at this here. Resistance, resistance. Had a lot of problems. Resistance again, and now we're breaking back down. So there's a high probability we're going to start to do something like that now, guys, on the interest rates. And then we're going to head back down. Then we have this level of support down the bottom here. If I have a look at major levels of actual support and resistance, it's probably a bit lower than that. So we could actually we could even drop down through there, but we may even get a bit of a move down towards Hakaching right there. So we may even be heading back down to a 2% handle. Now, I'm not saying that's going to happen on a short-term level, guys, or that 2% handle is that next major support level there. But on a short-term basis, it looks like we are starting to round. We had a very big move up, and this is what the market does, right? We had a very big move up, and now we're starting to round, and then we start to come back down, right? This is what the market does. It starts to round top, it slows. We had very strong momentum, up, and then it slows the momentum, and then we start to pull back. Make sense? And this next major level of support, which is just below here, which does look like that whole, so around about that 2.5 to say just below 2.5, looks like where the 10-year is going to start to head to. Let's go have a look at the 30-year, and the 30-year is doing something not as the 30 year is not as what's the word for it? It's not as weak, right? I'm not getting the same level of, see how we're starting to get this head and shoulder formation really nice. We're not getting that. We're still getting these higher lows through here on the 30 year. So if I go, we can see that of these two lines here that I've got, this is that major area of resistance. As you can see, we've had a major area of resistance, and then just above it as well. And now you can see we've had a very, very, very strong move up, and now we're getting, and now there's a real good possibility that we could get a pullback, and we could even get on the 30 year, we could even get a bit of a pullback out of. I don't know. The thing is, guys, this is what the chart's telling me. I don't know what's going to cause this. Maybe the Fed's going to come out and start to buy bonds again. I don't know. Or maybe the bonds are going to go through a bit of a rally. I don't know. I'm just reading what the market's telling me. And this is what's likely to happen. And then whatever the cause is to make this happen, then we can go from there, right? So let's go back to the daily chart now. And you can see here we've actually rejected it. Now look what's happening here. So we've had what? Remember, what is it? Let's go to here. Okay, so we had what? We have an upward trend is higher lows and higher highs. What's a downward trend? Lower lows and lower highs. So we could even go through a bit of a trend change, right? So the trend change is this: higher lows, and then a higher low. But what happens if we come back down, make a higher low, then a lower high, and then we start to break this low? Well, now what? That's a trend change. Look at this here. Higher low, higher low, higher low, higher low. Okay. Oh, look what happened. What's happening now? And this is where it's important for us to read what the market's doing right now. We're getting a lower high. Okay. Sellers in control. Not yet. Okay. Look what happened. Then we broke down through here. Okay. Now we're starting to get the sellers in control. So let's actually go to this overall chart once again. Let's actually take this off the screen because we don't need that right now. Actually, let's go to the 4-hour chart. I'm wondering why I actually had that resistance line. The resistance line is probably somewhere through there. I was wondering why I actually had that resistance line. I was wondering why. What was that? Look at this here. Rejection, and then rejection again as well too. So let's go back to the daily chart here for a minute. And this is what I'm looking at. So we have these. This low and then a higher low, right? So we ran up, pull back, higher low, ran up, pull back, higher low, ran up, pull back, higher low. But now look what's happening. We're not what? When we get a higher low and we break past previous highs, strong move up. Higher low, broke past previous highs, strong move up. Higher low, we haven't actually broken past previous highs. What's happening right now? We're starting to what? Do this. So if we start to do this, and then we start to break past previous lows, now we have what? We have a lower high, and then now we actually break in this low here, which now says the sellers are in control. If this happens, then now we've got what? We've actually got a leaning head and shoulder, head, and shoulder formation. So what would be the projection for that? Well, then what the neckline for this would be somewhere through. I'm just trying to draw this angle here properly. So the neckline is probably going to be somewhere through there, I would say. Yep, right through there. That'll be the neckline that I'd use from there. So, and this would be the head formation, as you can see. So the big thing that I'm seeing here. And actually, let me take that off the screen just for that there. If we do start to get a breakdown past this low, then the measurement from the head to there, right? From the head to there. And if we do start to break out, just say we start to break out here. Well, then as you can see, that's actually that goes right in line of this level back here, which is about 2.6 on the 30 year. And possibly even low of around, I would say probably even as low as around about the 2.5 on the 30 year. So we haven't gotten that yet. So we're not getting that yet, but we're starting to slow right now. As you can see, strong move up. So if we go to the 2 year, and look what's happening with the 2 year. The 2 year is actually doing something a lot different, right? Look what's happening. We're starting to what? We're starting to slow once again. We've had an astronomical move up. And look what happens. Every single time we get a massive spike, and I'm just going back to here. Every time we get a what? Every time we get a massive spike in interest rates, what inevitably happens? I don't know why this happens. It could be the free market. It could be the Fed. It doesn't matter why. It's just telling me what's likely to happen. Okay? Every time we get a spike up, we end up getting a spike down. Spike up, spike down, spike up, sideways, spike down. You know, here, spike up, spike down, spike up. What's coming next? A spike down. All right? Or, yeah, what's the opposite to spike? So that we're getting this on the weekly chart, but see this, and this is where we start to time our way in on the daily charts. What are we getting now? We're starting to get what? We're starting to getting a bit of a slowing. See how it's actually slowing now. And what I mean by slowing, look at this here. We had a strong move up, and then we had a nice pullback, and then we had a strong move up, and now look what's happening now. We're starting to do what? Probably maybe a bit of a double top, and then now we're doing something like this, aren't we? What happens if we do something like that? We're doing what? We're starting to go strong up, and now we're starting to round. It's called a round top, and then possibly we're going to start to have a pullback through there. So, so just looking at that through there, I'm just trying to see if I can see any angles. Let me go back. Let me go to the 4-hour chart. I'm just trying to see if there's any angles that are really apparent to where we are now. So, actually, let's go back to the daily charts here for a minute. We're definitely in a very, very, very overextended formation through here. So maybe we've got that going on right now. So that through there, and then that through there, as you can see, right? Support, support, support through there. So if we do start to break, I guess, below this level through here, let me go to the 4-hour chart to really have a good close look at that. Yeah, now that makes sense, right? So look what's happening here now. If this is the 4-hour chart right now as I speak. If this 2-hour chart, if this 2-year chart has a high and then runs down, then creates another lower high, and then we start to break past this level through here, then there's a high probability we're going to start to see even the 2-year right now is almost to 3%. I could see the 2-year going from almost 3% down to 1.5% through there. Now, again, guys, this is just the chart talking to me, right? If we do start to break down, we go up, and then we start to break down, and then we have a move down. So I don't know what's going to cause this, guys, but we are starting to see a major, major, major shift in the interest rates. And I do see that the spiking of interest rates that we've seen this year, I believe we're getting to a major turning point, and we're going to see the inflection point come. And maybe this is going to be also the thing that's going to cause the stock market to go up, because right now there's all these indicators firing on all cylinders, sentiment, fear and greed, so on and so forth, saying we're getting very, very, very close to a bottom in the markets. So let me know what you think in the chat box or in the comment section below.